Most traders think that only greed destroys them. Greed wants more, but ego wants to be right. You blame the market, you blame your emotions. You tweak your strategy, your indicators, your entries. But what if none of that was the problem? What if the real reason you keep losing isn't your system? What if it isn't your lack of patience, but your deep-seated need to prove you're right? Ego never storms in. It slips quietly through the door the moment you win. The first big trade that works, the first time you break your rules and somehow get rewarded for it, that's when it begins. You tell yourself you've figured it out. You start trusting your feelings more than your plan. You stop listening to the numbers because now you feel the market. The charts become a mirror reflecting how right you think you are. It's no longer greed speaking. It's validation. The excitement of seeing the price move exactly as you predicted. The dopamine rush that whispers, "You've mastered it." That whisper grows louder with every win, until it becomes your trading voice. Confidence and ego, they look the same from the outside. But confidence is built from process, while ego is built from outcome. Confidence says, "I followed my plan." Ego says, "I was right." Confidence respects risk. Ego believes it can control it. One keeps you in the game. The other makes you think you are the game. And that's when trading stops being about execution and starts being about identity. Ego doesn't destroy you in one moment. Corrodes you layer by layer. It begins with denial of losses. This is when you can't accept being wrong. You watch the candle move against you, telling yourself it's just a pullback. You move your stop loss just a little, then again. Because deep down, it's not about saving money anymore. It's about proving your idea was right. You don't cut losses because you believe the market will come back to prove you right. Then it moves to overconfidence after wins. The win gives you a rush. You feel untouchable. You start increasing size, stretching risk, convincing yourself that this trade is different, that you see something others don't. You call it instinct, but it's really ego wearing intuition's mask. And before long, you're no longer managing risk. You're testing how much control you think you have over chaos. This leads to revenge trading. When that painful loss finally hits, the kind that bruises your pride, not just your account balance, you jump back in faster and bigger. Not to recover money, but to restore your sense of self. You seek redemption, not discipline. One impulsive decision can wipe out weeks of patience. And afterward, you're not angry at the market, you're angry at yourself because you knew better. Then you build a resistance to feedback. The ego starts closing its ears. You ignore your journal, skip analysis, and only look for what confirms your bias. The rules that once protected you now feel restrictive. You tell yourself, "I've evolved past that." But in truth, you've just stopped listening. That's how ego breaks accounts. Not through greed, but through slow, confident decay, until every safeguard meant to protect you becomes something you believe you no longer need. Ego hates humility, but the market demands it. And that's the first real conflict every trader faces. You start defending your decisions with logic. The setup was right, the market was wrong. You speak those words not out of confidence, but out of denial. The ego builds an argument for every mistake. Anything to avoid the simple truth that says you were wrong. Slowly, trading stops being about performance and starts being about protection. Not of capital, but of identity. The spiral begins. You lose a trade, then you defend it. Then you double down to prove the market wrong. You lose bigger. You blame manipulation, brokers, spreads, anyone but yourself. And then, when there's nothing left to defend, you collapse mentally, emotionally, and financially. You stare at the chart not to analyze, but to understand how it all slipped away. The plan you built, the rules you wrote, and the discipline you promised yourself you'd keep. Ego turns trading into a battlefield, not between you and the market, but between who you are and who you think you are. At that point, you're no longer trading the market, you're trading your pride. Greed and ego often walk together, but they're not the same. Greed wants gain. Ego wants validation. Greed can be managed with numbers, fixed risk, position sizing, and clear targets. You can discipline greed with a system, but ego doesn't obey systems. It breaks rules to prove it doesn't need them. You hear it in your own thoughts. I know it's against my plan, but this time is different. I can recover this loss. I just need one good trade. I see something no one else sees. That's not analysis speaking. That's ego dressed in logic. And the market, patient, silent, and unforgiving, lets you dig your own grave one exception at a time. The irony is ego doesn't show up when you're losing. It shows up when you finally start winning. Because winning feeds the illusion of control. And control is the ego's favorite lie. You think you're evolving as a trader, but what's really evolving is your justification for breaking rules. In the end, every blown account tells the same story. Different setups, different markets, different traders, but the same invisible author. Every blown account has one common signature: ego's handwriting. Ego can't be eliminated, but it can be contained. The antidote is humility and structure. Detach your identity from your trades. You are not your P&L. A red trade doesn't make you a bad trader, but breaking your rules does. The goal isn't to win every position. It is to respect the process that keeps you in the game. Build process-based confidence. Win because you executed correctly, not because you guessed right. Confidence built on discipline survives drawdowns. Confidence built on luck collapses at the first losing streak. Use risk as protection, not limitation. Ego views stop losses as weakness. Professionals see them as armor. A stop loss isn't fear, it's foresight. It's the boundary that helps you stay objective. When everything in you wants to fight back, run a daily ego audit. Write down every time you felt certain. Write down every moment you felt invincible. Awareness is the first cut that bleeds ego out of your system. Because once you can see it, you can control it. Accept market supremacy. The market doesn't care who you are, how long you've studied, or how good yesterday felt. You survive not by being right, but by staying adaptable. Ego wants to conquer the market. Humility learns to dance with it. You won't lose only because you were greedy. You'll lose because you couldn't accept being wrong. Greed takes your money. Ego takes your clarity. And once clarity is gone, every decision becomes a negotiation with pride. Every trade you take is a mirror. It reflects more than your skill. It shows your state of mind. Evaluate yourself. Do you see confidence or ego? Discipline or defiance? Awareness or denial? The market will always show you who you are, not through profit, but through pressure. The question isn't whether you can predict the next move. It's whether you can control yourself when you can't. So before you place your next order, look into that mirror, because what you see in it decides whether you'll still be here tomorrow. Risk management begins where ego ends.